Hello everyone and welcome back to another episode of Market Bites, and I'm joined as always by Brett and Neja. Neja, first of all, how are you?
I'm doing well, thank you. I just mentioned earlier that we finally have some sun, so I'm looking outside through the window all the time because it's finally sunny after 2 weeks of constant rain. So I'm very happy about that. And yeah, how are you guys?
Yeah, I'm not bad. I think it was yesterday morning. I went outside to get a coffee, probably about 9:30 in the morning. I saw blue skies, and I was shocked. It was just like the most amazing thing. I've forgotten what it had felt like to see blue skies and a little bit of sun. So yeah, that hasn't lasted, but it was nice to be reminded of what it can be like. So fingers crossed the weather will start to improve soon. Yeah, not great at the moment. Brett, how you doing? Last time we spoke to you, you were in New York. That was all good.
Yeah. New York was all good. We had a small client event there, so that was good fun. Yoni actually popped in for a bit. Yeah, had quite a bit of fun, but I think the sun that we were enjoying yesterday has vacated itself, and I apparently is over across the pond to you guys.
Yeah, I don't think it's going to last too long, but it's quite funny whenever we do webinars or whatever. I like to ask where people are logged in from, and we get people from all around the world, and many of our watchers and listeners are from the UAE, or they're from Australia or some place in South America where it's beautiful weather right now. So I'm always so jealous of them, but our summer will return, I am sure. In terms of topics today, guys, I think we're not at the end of earnings season, but we're getting closer to it. We've still got Nvidia next week, the big one. So we can maybe get a little bit of a summary on that, how it's gone. Then we can talk a little bit about this rotation that we've been seeing in markets for some time now, but we can get a little bit of update on that. And then it's had a bit of a buzz over the last sort of couple of days or so, just people talking about Apple and its capex in comparison to the Magnificent Seven. So we'll focus on that as well. Right, Neja, let's get into earnings to begin with. Then, as I mentioned, we're not at the end now, over halfway through. If you had to summarize it in one sentence, what has surprised you the most out of everything so far?
Oh yeah, if I need to summarize it in only one sentence, I would say that it is a pretty strong earnings season, but some stock reactions have been extreme. Because on a big picture level, I was just looking at some stats for earnings season so far, and about 74% of SP 500 companies already reported. 74% have beaten their earnings per share, and earnings growth is running at about 13% year over year. So most of earnings season is already done, as you said, and we are waiting for Nvidia next week, which is almost a macro event, as we are saying every earnings season, basically. But yeah, when you zoom in that earnings season, there are some things that are very interesting. And I don't even want to mention Magnificent Seven. I just want to mention a few companies that we saw some interesting stock reactions. For example, there was a Crocs a few days ago, very strong move on the upside. And this is only one of the companies. For example, we also had Rivian, which was one of the positive surprises. With that, revenue slightly beat expectations and losses were narrowed more than expected. So the stock really jumped after the report, and that's kind of a massive vote of confidence in execution of name that has been struggling for a while. Then one of the companies that it's not mentioned many times on this podcast is maybe Garmin, which also surprised on the upside. It beat both revenue and EPS, and what really moved the stock was strong guidance for 2026. So the stock rallied after earnings. So this tells us that expectations were really low for the company. And then also on software side, we saw some positive some positive moves. For example, there was Cloudflare. The movement was around 5% on the upside after strong revenue growth and improved outlook. But Shopify, for example, we saw the opposite reaction, and it really showed how market can punish some of the stocks. And I think that that's really the theme, because we really saw some strong moves on the both side. And I would like to know, what do you guys think, or which names stood out for you this earnings season? Which moves do you have in mind, like that really surprised you this earnings season?
Tim, what are your thoughts?
Do you know what? And I've just brought it up literally as you asked that question. There's a website called, and we talked about it loads on the podcast already, Finviz, and they've got a section on their maps page where you can go to the earnings day performance, and essentially the more red something is on there, the worse it had on that day, the more green, the more positive. And what I do, and I'm doing it right now, sort of blur my eyes and say, what color can I see the most to get a feel for whether earnings has been good? And there's absolutely more green. But the ones that really stand out, and was that Microsoft move, right? Where on the face of it, it was a good report, but then maybe a bit softer guidance and worries about capex. That was quite an interesting reaction. That really caught my eye. And I'm just going through a few of these here. Oracle was down 10%. Amazon was down 5%. Tesla down was 3 and a bit. The financials on the actual day themselves, most actually were pretty red. JP Morgan was down 4%. Eli Lilly was up 10%. That's obviously a big standout there. It's quite interesting as well, Nezha, just listening to you talk there. You mentioned Shopify. Spotify actually was up about, I think, 10% as well, actually, that after they raised prices. But anyway, Shopify, I was looking, I think it was last night, it would have been last night. There was a post in relation to someone showing a chart of Shopify over the last few months where it's been under pressure. It's been down, and someone was having a go, and the CEO responded and was like, well, if you look at the share price since I started the company, it's insanely higher. And I actually quite like that the CEO was just like, you know what, have a look what I've actually done. And you mentioned Crocs as well, and we had a joke about this, I don't know whether it was last week or whatever, where we said people don't want AI, they're worried about capex. What they really want is Crocs. And it's delivered, isn't it? And interesting on Garmin there as well. Brett, similar for you, and I guess we can sort of lead this into the rotation stuff, really. Mag 7 struggled overall. I think certainly yesterday when I looked, they were all down year to date. So for earnings and that rotation play, how are you seeing it?
Yeah, I think the thing that stuck out to me for earnings season, I think so far, would be the reaction we've seen in mega cap tech, just broadly speaking. This is a group that it's been no secret that they were going to spend a lot on AI. Their CapEx budgets were expected to be high, probably come in higher, and they did. And investors are really not reacting. They don't like it. I think there's this worry about the balance sheet implications, the free cash flow implications, this question of, okay, you're spending, say, $200 billion this year. Are we going to see any real return out of that? Kind of like, is it worth it? And I know you're going to touch on Apple in a little bit. I guess that'll be our teaser to let that sit for a moment. But I think that kind of shows, to me, we went from like this, are we in this AI bubble like 6 months ago, to being, I don't even hear bubble anymore. It's investors are crushing these names if they don't like the financial implications of it. In some ways, it's a good thing. Like it's not just this unchecked optimism in the space, and it's kind of a good thing, even though the reactions are unfortunate for everyone who owns the stocks, which is pretty much every individual investor who buys individual names. But one other one that stuck out to me was Uber. It was actually a pretty good quarter, pretty good results, and that name just continues to sort of erode lower. And I think part of it is, again, this theme that we've seen in software now, where AI is going to completely disrupt these businesses. similar with Uber being that autonomous will disrupt it. And the company actually came out in their presentation with this, like a presentation on why AV will be an asset and not a liability to their business. And the market really did not care. It shrugged off that explanation, that presentation, and just sold it anyway. So I don't know. To me, I kind of coming into software as part of the earnings season, I was like, they need to do what Uber did and explain why they're defensible against AI. If we're just working off one stock, I guess I don't know if that will matter though.
Yeah, it's an interesting one, and Neja, I'll come to you as well. I mean, how big is this Nvidia report next week? I mean, the weight, I just was googling now, it's 13.68% of the Nasdaq. Do you think that if Nvidia's report, let's say, it beats just, but the forward guidance isn't as strong, do you think the next day is a bit of a bloodbath in the markets, that the Nasdaq sells off, the S&P sells off, other AI companies come under pressure? Do you think it's got the ability to move the markets that much? Or on the flip side, if it's really good, everything else just rallies?
I think that if we will see a weak guidance, that could put AI companies even under more pressure. Because I was just looking at sector performance of SP 500 year to date, and obviously, technology is really not performing well this year. It's down 5%. And if we are talking about Magnificent Seven companies, I think that this index that is following Magnificent Seven companies, or our smart portfolio we need on eToro, I don't know the exact number, but I think it's down 7% year to date, something like that. Really interesting, this rotation that Brett is mentioning, because it's so visible when you take a look at sector performance. For example, basic materials and energy sector is up 20%, and it's surprising to see how much technology is struggling this year after a few years of complete outperformance. And I think that Nvidia report next week is very important for all Magnificent Seven and also AI companies as whole, because I think that it's gonna move in one or the other direction, and I don't want to guess which direction that will be, but I bet that we could see a very strong move next week.
Yeah, I bet that'll be after the market close next Wednesday, and usually we record this podcast on a Wednesday, so I imagine this time next week we'll be doing a little bit of a preview on it all. I mean, Brett, it feels with the Nvidia one, we go back 12 months ago, it was almost as well. I know there's a few bits and pieces that also marked the bottom of the stock market, but it was almost like it helped, didn't it? Just sort of say, you know what, Nvidia is still here, after the DeepSeek stuff, after, tariffs and all of this, and some worries there with the trade wars. It was kind of like this earnings report was good enough, along with the next one, just to sort of show the market, okay, we can go on a rally for the remainder of the year, or the most part of the year. I use this analogy every time, Brett, when we talk about Nvidia. It's the heavyweight fight, isn't it? It's the one everyone looks forward to. The build-ups before that, people will pay a little bit of attention to, but not everyone in the room. Nvidia next week, everyone's going to have their eyes on it, aren't they?
They will. I mean, it's the biggest name in the market, and for me, it's almost hard to imagine that it's not going to be a good quarter or a good guide. When you look at what the Mag 7 came out and said they're going to spend this year, that was way above everyone's expectation. I mean, who's taking the lion's share of AI infrastructure spend right now? That's Nvidia. To me, it's just going to lead to a strong orders outlook, and I mean, I don't know that the market will react that well to it. It's not like it's a secret what Mag 7's spending. So the reaction will be interesting. But Nvidia is just going to be kind of chopping around. It hasn't really done anything for a few months. In a lot of ways, that's really been the market as a whole. I mean, if you look at the S&P, it's just been kind of bumbling along. It hasn't really had any traction one way or the other. When we start to move lower, the calls get a little louder for the 10 or 15% pullback. Then suddenly we find some support, we bounce higher. It's just a kind of range bound right now, which I actually really don't find to be unhealthy. The S&P had a 7-month win streak. It was up like 45% off that April low. That's an enormous move for an index like the S&P. And so this is, we're not talking about like small caps or like the NASDAQ 100. This is like the S&P rallying 40% in 7 months. It's really rather remarkable. So a couple months or even a couple quarters of this sideways action, I mean, I think that's okay. But it really points to the rotations we're seeing all over the place. And Neja was talking about some of the sector performance. You look at materials, utilities, staples, industrials, energy, they're doing great. If you're in those names, if those are in your wheelhouse, you're a very happy camper right now. But if you're in something like tech, communications, hopefully not overweight software coming into the year, that area has been really dreadful. But the rotation is, and excuse me if I'm rambling a little bit, but the rotation's been kind of everywhere. Like you look at the indice levels, the Dow's at record highs or near record highs. The Russell's up 6.5%. You look across, across the pond to Europe, or go the opposite way. You go to Japan. Those markets have been doing much better. The volatility we've seen in crypto and precious metals. I mean, there's some heavy currents moving in the market right now. Even though you look at the S&P and you say, okay, it's flat this year.
Yeah. And I know that I've mentioned that a few episodes back, but I think that this rotation really should remind us as investors and also other retail investors out there to diversify their portfolios, because I know that technology has been performing very well in the past few years, but if you got to concentrate it on that and didn't reposition yourself on the right time, you could get punished, or you are not exposed to gains that you could get if you just repositioned your portfolio a bit to different markets, different industries, and so on. And also this current situation, as Brad mentioned, I think it's also very healthy for the market, and it's nothing too special or depressing or anything like that. It's something that is completely normal, and I think that we will see more of that in the following months.
Yeah, I'm with you. I completely agree. I think it's healthy. I do. And to your point, Brett, I was looking at the NASDAQ earlier. It's been in a range, or this morning when I did the Daily Voice podcast, it's been in a range since September, really. You've had two kisses of the highs, three of the bottom of the lows, and really it hasn't done much other than stay within that. Obviously a large part of the NASDAQ is these big tech companies, and we can sort of move into the Mag 7 chat now, because I'm sure you've both seen it by now. Just there's posts going around and people talking about Apple's capex in comparison to some of those other big names, and I think it's. I think I'm going down the route of, I think it's a bit of a genius move from Apple. I'll get both your opinions in a bit, where they've sort of sat back and say, you know what, you guys, you do everything for us. Let me see what works, what doesn't. You throw your money at everything, keep spending. We're just gonna sit in the back and wait, and then when we make our decision, we're gonna take the market. And I quite like that. There was another stat that I saw where it just talks about the 2026 AI capex numbers, and Amazon 200 billion, Google 180, Microsoft 140, Meta 125 billion, and Apple is spending 8% of Google's entire 2026 AI budget on everything, not just AI, right? Which is just crazy. They're sitting on $150 billion cash, and whenever they want to, they can therefore, in their head, I guess this is what they're thinking, go and win the AI race. And there'll be plenty of twists and turns. This time last year, everyone was saying Google was done, and then suddenly, Gemini comes about and they've won it, and then suddenly there's a new model, and it's going to be an interesting race for sure. But I quite like the idea of what Apple have done here, to sort of, sit, wait around, didn't, go to sort of burn a load of cash and sort of a race to zero. And, the free cash flow is decent. The earnings have been okay as well. They've got these, these new AirPods coming out with cameras in them. Whether that's the right decision or not, I don't know. And we'll have to wait and see. But big revamp for Siri as well. But I think one of the main positives for Apple in this case, if they really do sort it out with Siri, is probably what, 1 billion people have an iPhone. I don't know the number. I should have researched actually before heading into this, but they've got such a big user base, haven't they, where you get that right, you're laughing. They don't necessarily have to win the model race right now, and even down the line, they've got a billion people also with the iPhones that use it every day. So I do think they'll be okay. Brett, your thoughts? Are you going down the route of wise move, or are you of the view that they're missing out? They're missing out. They should have been in it, and it's now too late.
I don't think it's a bad move. I think from Apple's perspective, they have that really profitable hardware and services components that some of these other businesses don't really have. Like Google is not leaning on, its Pixel devices the way Apple leans on its iPhone. When you look at it from that perspective, Apple's in this sort of unique fortified position where AI is not really going to disrupt its core businesses, where some of these other firms, they do have a threat from AI if they don't innovate alongside their competitors. So, I don't think it's a bad move at all, especially when you're watching, essentially from Apple's perspective, its biggest competitors from a stock perspective, dumping all this money into it, and they don't have to really participate. In fact, they can really let those firms do the heavy lifting and then go on and build something like Siri on the backbone of some of these different processes. So, I don't think it's a bad idea. Time will tell, I guess, but
I think that's it, isn't it? There's a time will tell.
Yeah.
But do you think it could be a smart play, or is there any worries on your side about it?
It's of course it's difficult to say how it's gonna turn out for them, but I think it's obviously they are thinking about that. It's not a bold move. I think it's a strategic move from Apple side. And when we see Alphabet, Meta, Microsoft, Amazon spending these huge amounts of AI and infrastructure, Apple is really spending much less than them, and they are using their best models available out there instead of building their own powerful one. And this could be smart, especially if AI models in the future will become cheaper and much more similar, because Apple's strength will be in their devices, in hardware, in ecosystem, and in user trust. They have a huge user base. And I know many of my friends or many people out there who, if they own an iPhone, they have full Apple ecosystem. And I think this is really one of their main strengths. But on the other side, there is also a risk in case that AI turns out to be controlled by few very dominant players, and they will really earn on their AI models. That could mean that Apple would really need to depend too much on them, too much on other companies, and they would be not so much dependent on their own ecosystem. But for now, I think it's very flexible strategy, and nevertheless, they will still have money to spend on it later. But the risk is that they will fall behind. However, I really think it's more of a strategic move from Apple side.
Yeah, I think so. I mean, listen, just looking at a chart now, the year performance I've got Amazon, Microsoft, Meta, Apple, and Google on the chart. Of course, you need longer than a year to look at all of this kind of thing. But if we go, obviously, Google really from sort of mid last year really took off, didn't it? And as of since January the 1st last year, so what's that? 13 months or so, they're up 60%. Apple is up 8%. Microsoft and Amazon are down 4 and 6%. So on one hand, you can look at Apple and say, well, look, some of those other companies have spent billions, and you spent considerably less, and you're outperforming Meta, Microsoft, and Amazon as well. But then, and then you look at the other side and you say, well, you get it right, like Google, you get that massive reaction. But of course, if you get it wrong, then you have all these worries about capex, which we've seen great reports from Microsoft, not even that poor forward guidance, but poorer guidance than the market was expecting, and capex worries, and your stock gets hammered. So just because they've done this doesn't guarantee, as you were saying, Brett, that it's going to work out. Yeah, I think we're in agreement. It's a strategic play, but you've got to get it right. Yeah. And I think that's it. But look, if we fast forward to this time next week, we're going to be doing the Nvidia preview, and then we go to Thursday morning, and the market could be, in general, significantly higher or lower. It does feel like yes, what happens over the next 7 days from now would be important. Of course it will. But it could turn on a sixpence, I think, after the Nvidia earnings. So my message, I think, to investors out there is, unless there's any new headlines that come out that you don't know about, I don't really think there's too much wrong with being a little bit patient for a week or so. I mean, anyone add on that, Neja? Would you agree?
Yeah, I definitely agree with that. I know it's hard
Yes.
to make a rational decision, especially when there are so many emotions and big moves out there. But sometimes it's the smartest to step back a bit, wait, be patient, and just to wait for things to clear out. And yeah, no rush to any of the decisions.
Yeah, there is no rush. There is no rush. I've just got a notification from my eToro app. The FTSE 100 has just hit a new all-time high, which is great for us in the UK. We can celebrate that for a little bit, but I guess that plays into the rotation play. A lot of equity markets across the pond for you, Brett, have started to do well, but then you go back a few years and the stock market doubled in 5 years. So swings and roundabouts. Guys, we'll wrap it there for today. Thank you everyone for tuning in this far. Like, share, subscribe, all of that. And we'll be back next week for the big one. Nvidia, Brett, Neja, thank you.
Thank you.
Thanks, Sam.